Hi, welcome back to Stock Talk. This is Joe Rabil with Rabil Stock Research. So today I want to talk about MACD in multiple time frames and specifically the MACD pinch play. It's one of the patterns from my book, and I go into this in detail in the back of the book, and I actually show a lot of short-term trading patterns that developed from it. But the reason why I want to bring it up in today's environment, and what I've been talking about with my subscribers, is making sure you have confirmed entry points, not only on the setup side where you get a setup that looks attractive, but you also have a trigger. And this specific pattern does this for you automatically. So let's go ahead and get into the agenda today. So yeah, I want to look at MACD in multiple time frames. And the reason why I think it's useful is because it's going to improve your timing. You could probably put the trade on using MACD in a single time frame. But in this case, what you're doing is using the short-term time frame to really kind of kick you in, to force you to wait for a sign that the smaller time frames are kind of working in your favor. So I call this the two time frame pinch play. And the other thing that I want to mention here in this lesson is how it works in conjunction with trend analysis. And then when we're done with that, we're going to go through the stock symbols that came through. Let's go ahead and get into this now, and I want to use the S&P chart. I've got an S&P with a weekly chart on the left and a daily chart on the right. So let's just look at what's taken place, and it's not necessarily a surprise to anyone to see that we had a trend in place to the upside. If you connect these bottoms, we had a really nice trend line, which happened to match the slope of the 18-week line. We broke that, and then we got a really good rally. So if any of you have ever listened to any of my videos related to trend change, one would be breaking the trend line. That would be the 1. 2 is the test of the high, which we've gotten here. And then coming back down through this low would be the 3. So we created the 3 here. So we've got our 1, 2, 3 change in trend. Now what that means, it's not necessarily meaning that the trend is confirmed down, because we only have one lower high in place. We would need another lower high and then turn down from there. We've already made 2 lower lows, so we could consider this to be a reversal from the looking at the lows, but I would like to see one more lower high, and then we have a series of lower highs and lower lows at this point. So with that said, if I'm following this pattern and I see a break of a trend line and then a rally back up, what I like to do, I'm not necessarily waiting for the 3 in most cases. What I like to do is when I get up into this 2 region, I look for one of my signals. And if you notice, what happened is price broke the 18-week and then rallied back up. It got through the 18-week a little bit, but look at what happened on a MACD basis. Do you see how the MACD line itself crossed down below 0 and then pinched back towards the signal line? So we had a signal line that was declining, and the signal line is essentially the trend, which is negative in terms of the momentum. And then we get a move counter to that, which the MACD line itself is actually a much more sensitive shorter term line that is going to rally with price. When price makes a rally, we're going to see a little bit of MACD in a lot of cases rallying with it, counter to the trend, which is now this red line, which is declining. So we have the break of the trend line and a rally back up in price, and then we see MACD break the 0 line and then rally back up towards the signal line. So that is a pinch play right there, where we get a rally in price, and sometimes it's just a drift. Price might just drift sideways, and the MACD might pinch up a little bit. And other times the MACD will only, if we have this, MACD will just kind of go sideways here while price is drifting a little bit higher. So either one of those can take place, and I'd still consider it a pinch play. But this is a crystal clear pinch that took place on this rally back up into the 1840 week. Now, what I like to do, again, when we get up into this region, is look at this and say, okay, I've got my pinch play in place. Now, do I want to just take it off of the weekly chart? You might do that. What I like to do is wait for the shorter term time frame. So if I'm circling this area here, that's essentially right in this region is where this rally is taking place. And if you notice, what happened is we rallied back up above the 18 here, and price made a move back above, and then it crossed back below to the downside. So we got to move back down to the downside. The MACD crossed down through its signal line and was testing the zero line. And then notice what happened. We got one higher bottom, two higher bottoms right at the 18-day. And this is happening right here. That's right where price on the weekly chart had already turned down and then got kind of like a last gasp rally up towards the 18 and the 40 week. And we're also rallying up towards the 18-day, which has turned down. We also have our second pinch play. So at this point, this is really pinpointing where I'm looking at two time frames that are getting in agreement. So the daily trend is getting back in agreement with the weekly trend at this point, which is broken the trend line, rallied up, and it's fighting a declining moving average this 18 week. So I'm now got two weekly, I've got two 18s, both the weekly declining, the weekly 18 is declining, and now the daily 18 is declining. But look at what the pinch is doing on two time frames. It's telling you where to enter this short trade. So right here, as this is working down, it gapped up and then started to work down. You could have gotten short immediately using a stop. I like to give it a little bit of room above the high, but somewhere above this peak. If you want to be a little bit more conservative, you could use the last higher, the last high up here, the last reversal point, and then when this goes to a new low, then you can tighten the stop to here. But the point I'm trying to show you is that what the two time frame pinch does for us is that it allows us to see, if you wait for this to take place, your higher time frame is going to roll, then your shorter term time frame is going to roll. And it's really telling you and showing you where the exact point is for entry. So I wanted to bring this up because it was such a crystal clear top, the way it developed and the way that it broke the zero line and then pinched in. And we had confirming evidence on an ADX basis. I mean, I'm not trying to say that ADX wasn't important, because if I'm looking at this and I see the ADX doing what it's doing, it's giving me confirmation that I should be looking at the pinch. But the pinch is more of a timing aspect. This really helps with whether this is a good trend or not, or really a strong bearish trend. Also notice on this rally, the ADX didn't get much of a rally at all, showing that the rally didn't have much strength based on the buying pressure. So we would be looking for the next signal to the downside, which again took place right here. So I wanted to bring this up just to show you that don't just go by one time frame right now. Look for a little bit more confirmation in your trading, because especially if you're looking at the long side, you can get a weekly chart looking like it's turning to the upside, but if you don't get the confirmation on the daily, then you're never going to enter. And I've noticed a lot of stocks that look like they're set up and then they never trigger if you wait for that shorter term trigger. So just kind of keep that in mind, because we're trying to preserve capital right now in an environment that is very, very tough. Okay, let's move on into the analysis now. Before we get into the stocks, just briefly, my services can be found at rabilstockresearch.com. The individual package has 2 to 3 reports each week, plus a special video for that package. If you have an interest in trying it, use the coupon code StockTalk, and you can get the first 2 months for $50. Let's go ahead and get into the stocks now. Okay, so the index I'm going to use today is the QQQ. I thought this was a great follow-up on the MACD basis, because there's several things that are going on here that are worth discussing. So when I look at this, and I've got my 4 time frames up with the hourly here, because the hourly is going to be important depending on whether you want to try and play a counter trend trade. But let's just start with the bigger picture. Notice what's happened here. The 18-month line, which has been rising since the start of this bull market, which I really don't consider this a bear market because that 18-month had never turned over or anything. I mean, yeah, it qualified based on a price basis, but there was no time involved and it never rolled over. So this has really been going up for 10, 12 years to the upside, and now we're getting this line to actually flatten out and potentially roll over. So I think that's a big deal, okay? Now we're sitting on the 40-month moving average, and this is not a bad spot to expect some kind of a rally, especially based on the fact that we've dropped straight from 400 down to where we are right now. Now let's look at the weekly chart, and I want to zero in because I take from the last low up to the peak and do the fib grid. And I've showed you guys, go back to my video on fib retracement tool and how I like to look at the 38, between the 38 and the 62 to get a feel for whether the trend is still intact or whether it's rolling over. And based on the long-term move, this big move all the way up from here, from this low all the way up, we've come back to the 50% retracement. That's no small thing. That doesn't necessarily mean we're going to reverse and start a big uptrend or anything like that. But a lot of times, if you just go right through the 38% retracement, you're going to find support at the 50% retracement. So this has the potential for a rally. Now, I also drew in our a channel, basically a parallel channel. So you start with connecting these highs and then draw a parallel line from these lows. And essentially what we've got is a pretty key area right here, which is where this is trying to bottom right now. We've got the 50% retracement and the lower end of this channel. So this is a good spot for a rally. Now, I mean, I want to make sure you guys understand that this is counter trend. I mean, we've got a trend to the downside after breaking the trend line to the upside. We've got our 1, 2, 3, just like I talked about with the S&P. Also had a really beautiful pinch play as well with confirming ADX. With that said, now we've made a big move to the downside. We're at the 50% retracement. We're getting kind of intermediate term oversold away from the 18-week. And we're hitting this channel line. So there's a pretty good chance we could rally back up towards the 18-week area. Now that line is declining, but it could meet up with it certainly at a higher price. So I mean, I think that's kind of where we are right now. We're in a downward mode. We got a downward trend in place, but we're oversold and probably do some kind of a rally. Some people might not want to play this. What you might want to do is just sit here. And if the rally is not very good, look to play the short side again, okay? If you're skilled and you know how to go down and use multiple time frames to play for a quick move, you could do that at this juncture. You could start to look. I'm going to show you what I would be looking at from that standpoint. But you got to be nimble. And frankly, you know, when you're playing counter trend, I think you want to be a hit and run trader. You don't want to play for big moves. Just try and make money in those type of trades and go from there. But we're at a pretty critical juncture. What's bothering me most about this is the fact that this the momentum is confirming the downtrend. So I wouldn't really expect this to break the 18-week and turn things around, at least not on the first try. Now, if we look at the daily chart, we start to look at the smaller time frames because we know we're in a zone where it could rally. Look at the divergence that's taking place. You see the MACD making a higher bottom while price made a lower low. Now, again, ADX is not confirming that. But if we can see green DI take out this prior peak or red DI take out this prior low, or maybe both, that really confirms the rally is there's a pretty high probability of a rally. So that's something you probably want to be on the lookout for. But because we have divergence on MACD, I'd go down to the hourly chart and here's what I'd be looking for. We have this divergence in place, but what I want to see now is we have a break of the trend line and a test. And now let's come back up through this high. And then what I would do is I wouldn't take that break. I would wait for the first pinch play here. I want to see the MACD cross the zero line and then pinch. I want to see green DI confirm by getting above 25 and holding. I mean, those are the kinds of things that I think I would do in a short-term trade. Use the hourly in this situation because we don't have that much room. And again, I think you have to be nimble. Okay, let's go ahead and get into the stocks. In fact, I want to mention that the NVIDIA just came out with earnings. And I got to tell you, I mean, this reaction's not so bad. They basically The news was bad. I mean, I think what they said was not positive, and yet the stock is not down that much. If this stock can come back today and close even or up on bad news, what would be considered bad news, you have to have respect for that. Look, I don't look at the fundamentals necessarily, and I actually don't even look in depth at the news, but I know if the news is supposed to be positive or negative, and I think it's supposed to be negative in this situation. If a stock comes out with negative news and the stock is up, I call that a bad news formation. That is pretty bullish because the stock should be going down on bad news, especially in the situation we're in. So that could actually fuel or help us confirm what we're looking for in terms of a short-term rally. Now, don't get too excited about this because this is the same situation. We've got a problem up here as you get up towards the 18-week. We're below the 18-month, which is starting to roll, and there's a pretty decent amount of resistance overhead. But I just thought it was worth mentioning. Okay, so Mosaic, I didn't get to this last week. So look at this. We rallied, we've pulled back to a rising 18-week, and the 18-week is above a rising 40-week. We've got strong momentum condition in place. The MACD has turned down a little bit. So what we could expect is some kind of a rally that maybe forces like a little bit of a double bottom in this situation. In most cases, I don't expect it to go straight up. But what we have done on a daily chart is break the downtrend and now come back and test. So what you could do is buy the 3. Because of what MACD is doing here, I'm not going to jump the gun and try and buy off this bottom or be aggressive or anything like that. I want to see this move up. I want to see the MACD confirm. I'd really like to see green DI confirm as well. But that would be kind of like the first opportunity is getting back up through 66. And then I kind of want to look and see. And now if I'm going to do that, knowing that this is probably going to go up and then come back down and test again, I want to use a low from up under here. As a stop. I want to come underneath these bottoms if I'm going to use that as a stop. But this is a stock I would definitely be watching from that standpoint. Okay, let's look at Adobe. Adobe, and you almost need to look at this on a long-term chart. This is the first time we could go back since the bull market started, really for this stock back in 2012. The 18-month has been rising all along. We've been respecting the 18-month, respecting it. Now we blew through it, and the line is turning down. So I got to tell you, I think there's room to rally. But when we get up towards that 18-month line, I would be very leery about holding this stock. I'm very concerned about what's going on. Now, what could happen is it could rally enough and strong enough to turn it into kind of like a sideways pattern. But I think either way, this is going to be a big waste of time. It could have more downside risk if it rallies the wrong way. But I'd be more inclined to believe because it's dropped so much that it's probably going to be more of a neutral pattern. If you want to trade this rally, it might have room up towards 500 or something like that, just based on the fact that it looks like it's losing downside momentum. But you've got to be nimble, use your smaller time frames, be very conscious of the risk that you're taking, and use your stops, take targets, be a little bit quicker from that standpoint. Airbnb, not a lot of good going on here because we took out these key lows. I think it's oversold and probably wants to rally back towards the breakdown area. So there could be a little bit of a play from that standpoint. But look at the momentum on the daily chart, and we have pretty strong red DI here. Notice the move to the downside based on the MACD confirming the low. So any kind of a rally, I think, would be a sellable rally. Archer Daniel. So this is very similar to MOS. Strong trend. Notice the MACD had overrun the signal line on the weekly, but we have strong ADX. So strong ADX tells me I have an upward bias. I want to play this. What this is telling me on a MACD basis that it's not necessarily just going to take off. What it's probably going to do is trigger and then come back down and do some kind of a test and do something along those lines. We have MACD overrunning on this decline, and now we've come down and tested and turned back up. So I still would prefer, because of how deep this overrun was, I would prefer to let this break out and buy the first pullback in this situation. But overall, this is another stock that I'd probably want to keep a pretty close eye on, just based on how strong it's trending. If it doesn't trigger, we don't take the trade. It doesn't matter how good it looks on a weekly chart if you don't get a trigger right now. BAC is in support. Look at how this has come back to a pretty big breakout area after a big decline on. So we've made a pretty big drop, and on a monthly chart, it's just been straight down. So I kind of consider that oversold, and sitting on the 40-month moving average with price support, do a rally. I mean, this should rally up towards the 18-week. So that's what I'm expecting. Now, watching the quality of that rally will tell us a lot. If there's not much volume involved, then I would expect it to fail there. But we got to see how this plays out. See if we get a lot of strength in green DI as this tries to rally. The other thing I would tell you, if the market rallies and this stock doesn't, that's a huge negative. But expect a lot of resistance up around 40. BLDR. So I like what this is doing. Notice how this is formed an ABC down. We moved down, we made a lower high, and then we made another lower high. Now we've consolidating right back to the 18-month line, which is still rising, and we have a pretty nice look to look at how strong the ADX is. Now I can draw a trend line here, and the reason is I've made a lower high and a lower low, so I can draw in my trend line. Now I've got the MACD right at the 0 line, and I have low ADX. So you can take a trigger of this break. If we get through this trend line, you could use that as a trigger to the buy side. A more conservative way to play it is to let it break the trend line and then buy the first high or low on the daily chart. That's a little bit more confirming evidence if you want to do it that way. Now, if MACD rolls down anymore and we get the signal line down here, then you're waiting for that higher low anyway. But if it turns right from here, you don't have a lot of strength in the sellers, you could take this as an operative buy, taking the trend line break. Micron, like a lot of semis, is pretty sloppy right now. I mean, we're in the lower end of this range. It could certainly try and rally. We're seeing a little bit of momentum divergence here. Notice how as we drop down, MACD isn't making a new low, and neither is ADX. The DI lines are all staying below 25. There's not a lot of selling strength in this based on the daily chart. And even on the weekly, notice how we don't have much selling strength because red DI has not crossed above 25. So this sets the stage for the potential rally. What we want to do is kind of what I described in the Qs. Look at this. We're at an area where I'd be looking to be a buyer, but go down to the hourly chart, look for some kind of an up move and then a higher bottom, a 1, 2, 3 change in trend with confirmation in ADX. And I think that could be a decent trading move, probably up towards, well, I would be pretty conservative and play somewhere up into the high 70s. Make sure you got the skill level to trade these opposing trends right now. Okay, it's still very dangerous right now. So if you're going to play counter trend, play with smaller amounts unless you have a lot of experience with it. Okay, so if we look at Palo Alto, this is actually a pretty impressive stock. This is pulled back to a rising 18-month line, and we've had a pullback, but we don't have much strength in the sellers. And MACD is back down to the 0 line on the weekly chart. Still a significant amount of support under 500, and we're back above that number now. So I'm encouraged. If this QQQ could actually make a decent bottom, I would not be surprised to see this stock trade pretty well in here. So certainly a stock to keep in on the watch list. And if things set up the right way and we get a real bottom in place, this could be a stock you really want to own. Qualcomm has come down similar to Micron. Look at how we're coming down and making a new low here, but ADX is not, and neither is MACD. And then look at what the ADX is doing on a weekly chart. We've made a pretty good move to the downside, but we're not getting any red DI strength whatsoever. So that just kind of tells me this area should provide support for some kind of a rally. The quality of the rally will tell us a lot, so you're only playing this for a trading move, and then you're evaluating the strength of the rally. But just looking at the bigger picture, I'm inclined to believe there's going to be resistance up there, probably somewhere around 155, 160, something like that. Okay, on Roku, we've gone full cycle. You see how this went all the way up to 500. Now it's all the way back to the original kind of breakout area. Now, a lot of velocity to the downside, didn't take a breather all the way. Look at all the red bars all the way down on the monthly chart. But notice what's taking place on the weekly. It's interesting. So we've been making lower highs and lower lows, but notice what's taking place on MACD. So we confirmed every new low up until this point. Now we're making a lower low here, but look at how the MACD is actually going in the opposite direction. Now, ADX is not giving us the same signal, so I view it as a trading play. Okay, this is not, I don't look for this to be a reversal of the trend, but you could get a decent rally off of this MACD signal. But in order to play this, you're going to need to use the smaller time frames. And I'd be looking at the daily chart. You could draw a trend line right here. Just do something along these lines. Look for a break of the trend line with green DI confirming, and then a higher bottom to form, and same with the green DI. And then you could play this for a trade up into the next resistance zone. So that's kind of how I think I would be looking to do this. Thanks for watching. My contact information is listed, so please feel free to reach out. Also, if you have an interest in having your stock analyzed on the show, send it to stocktalk@stockcharts.com. Have a great week, and we'll see you next time.
Hey guys, Dave Keller here with stockcharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.